Good morning, good afternoon, good evening to everyone across the globe joining us today for another BONARD webinar. I believe for most of us joining today, most of you joining today, you're already familiar with the concept of BONARD webinars, as we are trying to focus on all the important topics and aspects specifically related to student housing and rented living sectors. My name is Stefan Kolleber. I'm Chief Partnerships Officer at BONARD. It is my pleasure to welcome you all for today's webinar, which is titled Financing and Investing in Student Housing in 2026. We believe it's a very attractive and interesting topic. Thanks for registering for today's sessions. We have almost 300 registrants for today, except for lenders. We also have investors, asset managers, developers, investment managers and operators joining us today that are already either engaged in the sector or are maybe looking at it and looking for more data and insight. The session will last up to 60 minutes. We will start with a presentation by my colleague, Julia Oravat, who will guide us through some interesting latest data and trends related to this topic. And perhaps before I give word to Julia, just one more note. We are going to distribute the webinar recording and other materials after that. And once Julia finishes, we will continue this session with our expert panel, but about them a little bit later. Julia, can I ask you?
Ladies and gentlemen, it's my pleasure to welcome you at another one of our webinars. For the next 20 minutes or so, I will share with you a brief intro to the topic and then a follow-up panel discussion. As Stefan mentioned, the slides will be later on distributed, so feel free to listen in and then get your recordings and notes later on. A bit about us, if this is the first instance you meet BONARD. We are a research and advisory firm, over 18 years of experience in the sector. We cover various living asset classes for rent, and student housing is our strong focus. We monitor 15,000 assets across over 300 cities. Those are in Europe, but also in Canada, in Australia, a bit of Asia and Latin America. And over 200 investor groups are using our product, our interactive platform, and some of them, the names on the screen. Let's maybe introduce again the topic of private student housing, just so we are on the same page and we all talk about the same thing. This is not a university dorm, not maybe some housing that you stayed in as you were in uni. When we talk about private student housing, it's typically 10,000 square meter building where around 250, 300 rooms are fit. They're usually offering privacy, so those are private rooms, single studios or single apartments. Then there is a strong point of security, all in one bill. This is what parents have as a guarantee of safety for their kids. Ideal locations for these assets are 15 to 20 minutes travel time from the university or faculty, so on campus. Another strong point is the rich amenity and common space offer. Approximately 10 common spaces is quite typical. Those would be study room, gym, laundry, terrace, or even a pool. And then this all builds a sense of community, a strong development factor for the asset class. Student housing is developing and growing. The private student housing sector is adding approximately 280 new buildings every year. And majority of this, as I said, are those by the private companies. Universities are not developing as much or as quickly. That's understandable. And when you hear about these private student residences, those are designed with the purpose to then host students. So the rooms are compact with the maximized storage space. This concept is designed also with flexibility in mind. So often under commercial permit, because specific student housing regulation is not yet in place in those developing markets. So there can be assets of dual use, let's say student housing, but also the hotel, for example, as an alternative use. Let's see why those markets are growing and that popular. First of all, it's the fundamentals of the market itself, demand and supply. The main pool of tenants for student housing are students, right? You can see on the screen a bit of statistics from us. The number of students in those European hub spots considerably growing on 1.5% average over the last 5 years. And you see how intensely the destinations are adding the students from 2017 compared to now in Paris or London. Total student population is one part of the coin. Let's look at international students. Those bring considerable income to the universities. In Europe, in many countries, international students are the ones that pay the tuition. So naturally, those international students add to the city's economic benefits. But also those international students are often the ones that strive to find better quality private accommodation. So they would be typical tenant for private PBSA. The number of international students grow with several European destinations making a deliberate effort to attract more and more foreigners. So be it post-study work rights, scholarships, increased number of English taught programs. But also it's a growing popularity of various exchange students like Erasmus or US study abroad, where students are enjoying the benefit of coming to a new country for half a year and experiencing their culture. You see how much more intense is the growth of international students, 6.1% on average over the last 5 years, compared to 6 times less of a figure when we looked at the total developments. Now our growth of students versus the growth of beds. You see on the screen that purpose-built beds are added at a slower pace. Those are in light blue on your screen, while the international students combined with domestic students represent student population are growing at a much faster tempo, and the difference between the two groups are considerable. There are all kinds of regulations that prevent investors from building more and faster, all kinds of circumstances, be it political, economic, geopolitical, that prevents moving more capital into the market. But it's a very lucrative asset class that needs to be more and more developed over time. How does the business look for those already in the sector operating the schemes? Well, operational performance is strong. On your screen in front of you, you see the exercise we performed surveying the main biggest student housing operators over 2025. And on average, we see 96% occupancy across European countries. More mature markets like the UK are going over a bit of a consolidating phase in the sector. They're much advanced in student housing than the rest of Europe. And less mature markets have even higher occupancy rates. It's the strong argument for the sector and for more investments in student housing. Another typical feature of the sector is dynamic rents. So with tenants coming to 6, 10, or 12 months, it's possible to increase rent several times per year. The sector enjoys growing rent trend. You see that as well on your screens, over 5% from last year in 24 versus 23 was the growth. And then major European countries such as Germany or France have a bit of even higher bump. The rent increases are even taking over the inflation. And some European markets have seen a double-digit increase, be it in Poland. We predict that such a rapid increase wouldn't be sustainable long-term. As the sector is maturing, the forecast is planned to stabilize, but we still expect a reasonable performance. There was also correlation between student housing rents and the rents at the regular residential market, as they're all part of one big sector, of course. This is the case study of Germany that you see in front of you. Basically, we took the most saturated cities in student housing and then the least saturated cities and compared how the rent was growing at what tempo, depending on the market saturation of the city. And we've seen a correlation that the more student housing you have in the city, the less the rent in other sectors grow. So regulation on rent for, let's say, regular multifamily is not always the answer. It's rather more student housing that will ease the pressure on rents. You see on your screen, first slide in the section of more investor and financing fundamentals. So we are moving from a market fundamentals to those a bit specific to the sector. So you here see the key players. As student housing is another commercial real estate asset class, those typical players operate, be it the capital, institutional, pension, insurance, sovereign money, infrastructure funds, or the private capital. That capital is managed by the real estate asset managers who cooperate with developers and operators. Institutional capital is in preference of more mature asset classes with stable returns and volumes, where they can already obtain a standing, scalable amount of product. In student housing, it's still developing, it's still growing, and the liquidity is getting there, but it's not fully in place. But the institutional capital already believes in the fundamentals of the sector, how the supply-demand dynamic performs. So they are considering the sector more and more. In terms of operations, there are various models available. Vertically integrated firms, those who started with student housing as the first enterers, decided to build their own know-how and established a company for operations, as, for example, AXA did with Boost Society, and there are many more examples. It's also available to have third-party operators, like in the hotel sector, where there is an external invited operator that would come and bring their own expertise, of course, for a fee to operate the residence. Let's see maybe a bit more about those operational specifics. Starting with that vertically integrated model, again, quite common, ensures the alignment of the capital goals and the investor operator specifics, enables the cost saving as well, as no kind of operator margin is in place. These models are efficient when operations become scalable for running a portfolio to maximize the know-how that was already established on several residences. Again, another alternative would be third-party operation. On your screen, those are two types, be it a management contract or a master lease. Both are used for third-party operators. There are available already companies that perform in UK or Europe, Hugo, Odalis, host students, home for students. It's either those that are operating exclusively for one investor or as a third-party operator, performing also under white label. Those are not that common yet, but developing as student housing is very close to the hotel sector in many fundamentals. When we look at the standard typical life cycle of the student housing project, it's very in line with the typical time frame for private equity funds. So it's usually 5 to 7 year length of a timeline. If we take it from the investor asset management perspective, those usually enter when the project before construction. In some cases, they are also able to take the building permit risk. And the investor acquires the project, secures the operator. That is usually done in ideal cases 12 months even before the opening, and gets the financing, and then followed by the construction, active mobilization phase, and potential exit. Student housing is a heavy operational asset class. So typically the tenant mobilization takes 12 months and is starting a year before the opening. An experienced operator diversifies their strategies to B2B and B2C sales, performs a mock-up room, but it's rarely used that the whole building is 80-90% pre-leased, even though a lot of effort is done to get several contracts before the opening, but it's still, as you understand, quite tricky. And then during the opening, there is then a mobilization phase when the occupancy is increased over time. As those strong efforts are done before the residence is open, the typical opening occupancy rate is quite high, from 93 to 95%. And then over time, this occupancy is driven to 98%. And then the exit appears. From the liquidity perspective, student housing, as also other asset classes, this student housing wasn't immune to kind of the global turbulence of the economy. So it took a stronger dip in 2022. But then we could see that the attractiveness of the asset class prevailed. The last 2 quarters, Q2 and Q3 of 2025, have seen a strong increase in the investment volumes, setting a positive trend. This has been particularly influenced by several main transactions, larger deals that happened in the UK, the United's acquisition of Empiric, the GSA acquisition of Sanctuary, Quadrill's acquisition of Apollo's portfolio, and the acquisition of the Livenza portfolio in Portugal and Spain by CPP and Nido from Brookfield. On the screen, you see the exit yields for student housing. The returns in the sector are lucrative still compared to the many other mainstream asset classes. After the 2-year expansion, which started in 2022, the student housing exit yields have been stabilized, signaling that in some core markets it may rebound, but it's all happened like in other mainstream asset classes due to the softening of the global interest rate policy. A bit to summarize what we covered so far, these are the key business assumptions. Ideal project size between 200 500 units, so it's the efficiencies of scale in your operations, that almost full residence, 98-95% occupancy, an ideal one for exit, unit types that provide privacy, studios and suites, but also say double studios for the markets that need more affordability, a solid rent increase that in many cases outperforms inflation, leakage of 20-25% of gross rental income, Part of your costs is usually typical sinking fund, a set aside fund for larger repairs that are there from the beginning of the your life cycle of your project. Available operational models. One of these is the management contract. Typical compensation that you would include in your business plan would be from 5 to 7% of gross rental income, depending on the type of the operator. And then your net income without your costs at the level of 50 to 70%, depending if it's a master lease or a management contract. All bringing this to your exit strategy with your cap rate from 4 to 6%, depending on the market you would be operating in. On the screen, you see the last slide I will conclude with content-wise, those who kind of already cracked the code and are actively investing in student housing. We've monitored 480 investment groups that now own portfolios, larger size, over one building student housing sets, groups that are diverse globally, but also diverse in their investment strategies and their expansion plans. Be it American capital, local domestic ones, Singaporean and Asian as well. But we will discuss it more today at the panel. If you would be interested to finance a student housing development or invest in one, you can use our platform product that harbours the market data, or utilize our report for on demand for your commercial due diligence. We do both and happy to assist you. That's it from me. Thank you for your attention.
Thank you, Julia. Very much appreciated for guiding us through the latest data and trends and looking at how and why student housing sector has been enjoying the interest of many investors across the globe. Before we so thank you again for that. Before we go to the panel, I'll be introducing it in a short moment. Just a quick note for our dear audience today. The panel session is here, of course, also for you to engage with us and with the panel, either via polls. We will ask a few, and of course, feel free to leave your vote, and also feel free to leave your questions either in the Q&A section or maybe some comments in the chat section of this Zoom webinar. We either respond to your query during the webinar, one of our team members, or if it's specifically related, either the comment or the Q&A, the question to one of our panelists, we will be following up in written later on. Without further ado, I'm very pleased and delighted to now welcome our expert guests today. Thank you, gentlemen, for turning on your videos. Happy to see you, happy to have you here today. We have Charles from Berlin HIP today and Sky from Maslow Capital. Gentlemen, please feel free to introduce yourself now, and then we'll go to our first question. Charles?
Yes. Well, firstly, thank you very much to the BONARD team to give me the opportunity to join the panel. I'm very excited with Sky to exchange a bit today. Quick introduction on my side. I'm working for the international origination at Berlin HIP, which is part of the LBBW group. We have a loan portfolio which is above 60 billion euro on a global presence. And I'm a strong believer of student housing, of PBSA. I have helped several lenders already to set up their PBSA lending platform. And we want to do more. We are very excited about student housing and happy to discuss today.
Hi there.
There you go.
I'm Sky Maps, and I work in the origination team at Maslow Capital. We are a UK and European focused living sector lender. We are principally what you would consider to be a debt fund. We've been working in the UK for 15 years, in Europe for around 3. And we provide development credit to a range of developers.
Thank you, Sky, as well. Thank you, gentlemen, for your introduction. Well, let's then continue with the first question. It's rather more general to kick off. We've seen the data presented by Julia, and I'd like to ask you, perhaps from your perspective, what do you think makes student housing an attractive asset class for lenders and/or investors today? Perhaps we can start with you, Charles.
Yeah, look, overall, what makes student housing attractive? PBSA has proven over the last years to be a very resilient asset class. We had several crises from different origins, and PBSA has always performed and remains a very attractive asset class as well. If you look at the risk-return parameters, it fully makes sense from the investor's perspective as well as for the bank. So being a good hedge against inflation, we are looking at our core clients already in the PBSA market and even wanting to reallocate even more capital into PBSA. So as a senior lender, we are following our clients.
I mean, I would echo that. I think there is a strong counter-cyclical aspect to PBSA. I think, as Charles points out, it's weathered a series of storms, COVID probably being the most obvious and recent in my memory. It provides a predictable inflation-linked income stream to an investor base that needs that. So I think it's always been, I say the last 5 years, an important part of our portfolio, but I would certainly say in the UK over the last 2, it's become an even bigger part of what we do. Query whether that's largely because the resi market in the UK is struggling, but it's very much a sector that has a great deal of traction at present.
Mm-hmm. Thank you, and perhaps I will just add that we're glad to have you both here today because you can provide experience and perspective from entire both UK and European continent, which is always very appreciated given a little bit of a different maturity of both markets. Great. Before we go to another question, which is of a similar nature in this first part of our discussion that is more related to market positioning and investment appeal in general, I would like to ask for a first poll. One of my colleagues will put it up shortly, and it would be great to hear from everyone in the audience your current status and their involvement in student housing. So feel free to vote, and while we are waiting for the results, which will take maybe a moment or two, that question for you, gentlemen, if you perhaps compare or can compare the evolvement or development of the PBSA sector from the banks and financial institutions perspective today versus 5 to 10 years ago, how do you see that? Have we already, from a broader or wider perspective of the European or UK and European landscape, come to a point that it is anonymously considered an established asset class, or perhaps do you have any other perspective on that?
I can take
Sky.
that. I think,
Sure.
Yeah, sure. I think it was interesting. I was having a chat with a Portuguese colleague the other day, and the way he was talking about PBSA in Portugal is kind of what the UK was sort of 10 to 12 years ago, which was there was a big affordability debate. Resi was more of an attractive asset class to be in than PBSA. PBSA was sort of an ancillary to residential, whereas now, speaking purely from a UK perspective, student accommodation, how financiers approach it has changed markedly. The sector has very much solidified itself. It is mature in many ways. It was an interesting chart you had there about the occupancy across Europe. Right? This year would be the first year in a long time in the UK where occupancy has been sort of sub 90%. And that is really because it is a recalibrating market. And there were more distinct winners and losers than perhaps there were 5 to 7 years ago. But it's still a very interesting space. Rental growth remains strong. The developers who are active in the space are of a caliber that a lot of financiers want to support. So it's certainly interesting and has grown in its attractiveness, I would say.
I can only echo to that point. Basically, 10 years ago, look at the conferences or the webinar. There was only hundreds of people. Today, you're counting thousands of people. What I want to say is that PBSA was a niche product, a niche market, and now it has evolved to be a mature and way more liquid asset class. Definitely, UK was one of the first mover. But we see on a global basis, I mean, just look at the largest transaction in real estate that happened the last 5 years, where PBSA were actually the largest, the most represented largest transaction for real estate. And that goes from the US to UK to Spain and Australia. So on the lender side, we have basically adapted our lending policies to PBSA, looking at these trends and these large volumes. The lenders definitely want to be part of it.
Thank you, gentlemen. Now let's see what's the status and the current involvement of our audience in the sector at the moment. We see dominantly that people joining us today are already actively financing or investing in this sector. 65%, so 2/3, more than 2/3, and then precisely 2/3, and then we see the rest is evaluating it for the future, or have already evaluated it but have not yet decided to finance or invest in. Great. Any comment to this, gentlemen, or shall we move to another part?
That doesn't surprise me.
Yeah. Indeed, not surprising. Good. Let's move on. Another thing that perhaps would be good to discuss today is basically the financing strategies and capital structures. And again, we will have a couple of polls related to the upcoming questions. But let's start first with how do you typically structure and finance student housing projects? So to learn more a little bit about your models and perhaps what are the main elements of your business plan in this sector?
I'll go first. So so I'm slightly different to Charles in that we only provide development credit. So a lot of the analysis that we do needs to be forward looking. It will be what's the suitability of the macro location in which you're being asked to lend, then the micro location, the affordability of the rents relative to peer group, the experience of the developer. There would be the main things that we look to. Occupancy data is sort of super important in informing how we think about where we'll lend. Because in the UK market, really, what you've seen is a bifurcation of demand. You've seen what I would call higher tariff universities, which are typically Russell Group or sort of world-renowned universities, having a real sort of flood of demand from students, and then sort of lower tier or medium sort of tariff universities struggle more. And then what you find is that people pile into those locations from a planning perspective, and then saturate those markets in the sort of short to medium term. So that's a big part of the analysis that we have to perform. Picking the right location is a fairly obvious statement to make, but it's absolutely key to any decision you make. But they would be the main things that we would think about.
Mm-hmm. Charles?
Yeah, on our side, I mean, we can provide development financing and senior financing for stabilized portfolios and for large tickets, basically. This is our core business. And in the analysis, I mean, it's basically in three parts. The first one is definitely relating what Sky say. I mean, location. Obviously, the market, to analyze the market with the great data that BONARD are providing, basically with the percentage of international students and the strong KPIs of PBSA. The financials, obviously, is the cash flow strong enough to cover the debt service. And a point that has been touched by Julia earlier is also the relationship between the sponsors and the operators. We are seeing an evolution as well in the market here. And it's important to understand the future implication. And that is for both development and stabilized assets, yeah.
Interesting. Thank you. Before we go further, I would like to ask for another poll to kind of see and look for some synergies here. We should already see, or you should already see, what's the biggest challenge you face when financing or investing in student housing. And again, before people will be able to vote, we can perhaps jump to another question, gentlemen. Of course, without disclosing any specific figures, could you outline your general view on leverage levels, LTC/LTV ratios, interest rate dynamics, typical debt structures? Perhaps you mentioned some of these already, but maybe being a little bit more specific here.
Maybe I start here on the more conservative and Sky take more leverage on this one. Well, look, we are a senior lender, obviously, so the LTV is roughly between 50 to 60%. I'm talking for the stabilized asset financing for time period between 3 to 7 years, and it's basically the sweet spot of the senior lender. I guess Sky has more to say on the LTV level, right?
It's just a higher number. It's you pay for it though. So we are a credit fund. Our traditional product is sort of 75 to 80 of cost, and that will typically translate into 65 of value. We do higher levered stuff with sort of select partners, where it's a basket of assets geographically spread and all cross-collateralized. But that's really more unique. And that would sort of stretch sort of 90 of cost, maybe higher. But I would sort of stress that's the exception, not the rule. Returns wise, it's all IRR driven, but without giving you specifics, it varies. And the investment horizon will be anywhere normally between 3 and 5 years.
Thank you. Of course, I appreciate you can show as much as you can, and that's again very much appreciated. Can we see the results of the poll number 2? So the challenge is obviously regulatory or policy uncertainty is scoring high these days. Perhaps closely with underwriting and data availability. Well, data availability, that's something we could possibly help. So just give us a shout. But thanks for that, dear audience. We should move on. We have another one. Another poll basically that we are going to do right now, and that's basically perhaps a bit more specifically related to banks and other lenders in the audience. So, but it's open for everyone, of course. So please vote. And again, in the meantime, we already mentioned that. But is there, or do you see any more specifics between perhaps two of your businesses that you represent? more traditional versus perhaps more alternative lender, and how they differ in approaches to financing PBSA assets, sorry, or what you shared already in the previous question is pretty much that.
I would not insist on the difference, but maybe how we complement each other, because we have seen some in some market there is a high need of supply, i.e. There is a market for developers, and there you have a very various range of business plan for development that will fit in your lender, but other will fit that fund like Sky. And there is basically at exit, there is also a need for refinancing. And this is where also as a senior lender, we can enter with basically it's to refinance the construction financing once the property is completed, which is basically a combination of what we see more and more in the market.
I would agree with that. I think the businesses are complementary in many ways. So I would say the vast majority of the schemes that we lend on exit by way of a refinance to an institutional lender like Charles. That's just typically what happens. You take a higher levered development product, and in the fullness of time, the LTV moderates because of rental growth, and then you're able to access cheaper financing. That's just that's the life cycle I typically see. I think Charles can correct me if I'm wrong, but I think the way we think about these schemes is broadly the same. It's just we offer slightly different products, for want of a better word.
Definitely, yeah, agree. It's a product for every different business plan. So definitely, yeah.
Sounds great. Thank you. Interesting. We should now see or have the results of the poll. We see that basically banks, lenders, but maybe also the rest of those who voted today are not yet adjusting the strategy, or at least the majority, if I'm correct in reading these results. But then we have more evenly distributed answers with either tightening it, which is the lowest one here, or some modest or unsure answers here, which I think again is perhaps in line with the current period that we're going through, more from the macroeconomic perspective. So thank you everyone again who voted in this more specific one, and let's now move to another chapter, risk assessment and some underwriting considerations. First question for you, gentlemen. Compared to sectors that are outside living, hospitality, office, some other, if you have that experience or perspective, what are the key risk factors you assess when evaluating student housing assets or assets similar to student housing? Charles?
Yeah, well, look, it's always there are multiple risks, but when we are looking at the projections, the projected budgeted cash flow, basically a student housing, you have a fixed cash flow from one semester to one academic year. But in many markets, there is such an imbalance between demand and supply that we can have some certainty or some sort, so to say, to be convinced about the future business plan given the rationales of the market. So projections is a risk, but it's highly mitigated by the quality of the market. Obviously, the quality of the assets, location, but also the experience that the operator provides to the students. It's a highly important thing because we need to think about who are the end user. Those are students, right? So does the student housing provide enough services for students? And this links again to this relationship between owner and operators. And this is a very key element for us to really understand what triggers the incentive on each party. Sometimes it's the same parties, but sometimes, as you mentioned in your presentation, you have third-party operator. So I think if there is one risk to identify among all of them, that will be one of them that I could underline.
I think like I don't think I'm wrong when I say this, I think the availability or the transparency of data in, say, the hospitality sector or the office sector is just much more prevalent than in student accommodation. Like, I think there are people like your good selves who do provide data, but that's it. When you think about the hotel sector, it's just so much more transparent and multiple data sources. So I think that's one side of it when you think about student, and that's why you really need to sort of form your own opinion on it, which can be quite challenging. I also think when you think about the underwrite of a student accommodation product, certainly in my world, I'm a very UK focused lender, right? So, but it's the one sort of sector that I operate in that is really exposed to sort of macroeconomic policy changes. If I think about Donald Trump, or I think about his attitude towards international students, and the impact that has on demand for UK universities, like things like that. I don't really have to think about that when I'm thinking about a residential scheme somewhere. And sort of the last thing that's different for me would be one of the debates that we're certainly having in the UK is the sort of long-term financial solvency of a lot of universities. Again, considering that is something pretty unique, right? That would be the things that I would think about.
Thank you for more detailed insight here. Of similar fashion, we have the poll coming up, which is basically asking our audience, what risk do you consider most significant when financing and investing in student housing? And today, and here, perhaps let's wait and see what results we're getting. Let's give it a few more seconds so that Charles and Sky can perhaps comment on the results here, and then we move on to the final part of our discussion today.
That's a hard one, that question.
Yeah.
Yeah, we try to make it difficult both for you and our audience. Equality. Do we have results? I believe we do. Thanks for everyone who made it to leave your vote. I don't want to comment each one. I consider you to be, of course, experts here. Any comments or thoughts on what you see here?
I'd have probably gone with the majority. I'd have gone with market saturation or occupancy risk. Like, I think that is, I think if your exit is by way of a sale, that is the most fundamental thing there. I think a lot of lenders in my shoes can sort of be, or have been saved, I guess, by the liquidity in the investment market. If you'd have asked me that question 3 years ago, I'd have said macroeconomic risk. You know, if I think about 21 and 22, that was an awful period of time in which inflation and interest rate volatility caught a lot of people out. Development risk isn't. I think you can mitigate that, but I would definitely say market saturation and occupancy risk. Going back to my point on data and having access to that data, I think it's just so important.
Mm-hmm. Thank you. Charles, any thoughts? Or
I think I can relate to the poll. I think I'm not too surprised from senior lender perspective. This is the thing we have to underline when we make the analysis. Obviously, it's hard to hear, but yes, there are some markets that are start to be oversupplied. And this needs to be cautiously monitored. Yes, but the rationale on PBSA, if you have the right location and you answer the need to the student, you will achieve your business plan if you remain modest in your ambition. Yeah.
Mm-hmm. Thank you, gentlemen, and perhaps very quickly, more specifically on an asset level. Do you do you have categories of assets that you would consider as more or less risky, and perhaps on the other side, what are the projects that you're looking for? I'm asking a bit more on the level of if each of those risks that you're able to tolerate.
Yeah, I'll go first. Yeah, so I think a lot of our thinking is driven by location. And when I say location, I mean, is it a multi-university city? Does it have a Russell Group University in it? That kind of thing. So I think we frankly do have a list of places we want to lend in. And we have a list of places we do not want to lend in. And that's not to say that you can't have a good experience in a place that's sort of on neither of those lists. It's just, in my experience, it's better to try and focus on the places you want to be rather than sort of rationalizing the places that don't feature on any list whatsoever. So, but the thesis that we have, certainly in the UK, is London is a highly attractive university city, like the most attractive in the UK. And then when you start to think about regional locations, you must think about it in terms of where is the demand and will there be a continuation of that demand, and then you try and overlay that with supply and indeed future supply, and then make a decision based on that. But that said, we've many people on this call may not have heard of a place called Derby. Derby is somewhere we actually had a very good experience from a lettings perspective, but it's not somewhere you would immediately think to lend.
Mm-hmm.
Yeah, you might be surprised in some locations that really make sense for student or student cities. In Germany, there are some considered to be small city but large for students, and we will not necessarily lend for office or retail logistics, but for PBSA would makes fully sense. I would add also that in the analysis, it's not only about the cash flow. We have seen a very, very strong cash flow, very strong performance, but we also need to keep an eye on the quality of the real estate. I mean that the quality of the capex injected, is the sponsorship committed to maintain a high level of services and just pure real estate quality. And let's not forget the ESG topics that are also important due to regulation, etc. So you might have a very strong cash flow, but it needs to be attached to modern prime quality assets as well.
Thank you. And perhaps one more thing from more operational perspective, is it, could you specify that would it be rental levels, occupancy rates, or the quality and experience of the operator that you would look at, and perhaps which one of these, if you can say or share, would have more weight when reviewing?
I'd go occupancy. I think occupancy tells you a lot about a location and the sort of viability of further development there. That'd be mine.
Look, from a senior lender's perspective, all of them are very, very important. Definitely, I can't pick up one more than the other, but if you really force me to take one, I would say the quality and the track record of the investor. Has the investor proven to understand PBSA, to be able to operate or work with an operator? So really, we want to work with prime investors in this area. Yes.
Very interesting. Thank you for that. I think this has brought some good insights to our audience. And let's move on now to a final topic for today, as we are slowly but surely running out of time. We want to look into the future very briefly, as I mentioned. So perhaps I would ask you right away, how do you expect the European student housing, I mean, here both UK and European student housing sector, to evolve in 2026 and beyond? And perhaps a sub question to that, from a financing standpoint, how do you anticipate lending appetite, deal structures, and risk tolerance to evolve in, let's say, next year or in the near future?
If I might start, I'm optimistic for student housing now, and in 2026, I think we see capital being allocated or reallocated into PPSA. There is, in some cases, large sponsors have set up their own operation platform, and we see a certain consolidation of brands and operative assets. So I think there is strong potential for large transactions, for development of the market in the right direction. But I would just underline 2 points that still need to be monitored for the future, and it's basically the central banks. So we have the Bank of England and the European central banks. Which rates are they going to apply? We have seen positive signals this year, but it's all related to the inflation. Basically, your interest rates will have an impact on the market value, on the cap rate. So that's basically, it's not under our control, but it's something that's to be monitored. And the second point will be as well governmental control over rents, as well as the number of visas for students and international students. So overall, I'm still positive, but we need still to keep an eye on a couple of points. Yeah.
I would largely echo that. I think I'm net very positive on PBSA. I think as an asset class, it's highly attractive to institutional capital, and I think it will continue to be so. I think in the UK, a lot of developers are probably going to have to consider pivoting into different strategies when building out PBSA. I think the issue around affordability that we have in the UK in some locations is becoming a problem. And the only way of really dealing with that is buying up second generation stock and refurbishing that and lifting the rents. But what you are able to do there is generate a more affordable product, and that sort of value add strategy is something I'm seeing sort of happen more regularly now. But I would agree with Charles, like regulation and governmental attitudes towards students, friendly or otherwise, is just absolutely key. I'm hopeful that interest rates will continue to come down in the UK, and that will continue to make PBSA even more attractive. But as I say, net very positive on the sector.
Thank you, gentlemen. Perhaps I'd like to conclude this session with a quick poll, asking our audience to vote. How do they see the financing and investing landscape for student housing in 2026 and perhaps beyond? So feel free to vote. Okay, I think we should have some results in. Let's see how our dear audience sees it. Okay, so basically it's very close. It's either relatively stable, similar to 2025 conditions that you gentlemen already, I think, very well summarized, or it's moderately improving. That's another almost 40% people expecting steady demand and cautious optimism. I think on that note, I'd like to thank you, gentlemen, for your inputs. Unless you have any last comment or closing remark to either related to this poll or anything we've discussed so far.
Thank you to everyone for their time and for you guys for inviting me along.
Thank you. So thank you both, Sky and Charles, for your time today, for really good insight. Also to Julia for presenting, as well as the audience. It was great to see great turnout for this topic. I believe we will be close monitoring 2026 when we are getting closer, and this is certainly not the last webinar on this topic. Speaking of which, I just want to share that we have another webinars and events planned. We have a development webinar next week on November 12th. We have also property tour in the Netherlands planned, as you can see, November 18 to November 20. And we're also planning some other more locally focused contents for Australia and Canada. So not just UK and Europe. For these and other that are coming up, you can always register either directly or register your interest at bonard.com/insights, as you can see. And as Julia mentioned, if you need to assess your asset portfolio, if you need simply more investment confidence, I think that's what we're currently seeing in the market. We're here to help and assist in any way we can for the data need that you might have. If you are interested, then feel free to contact us at data@bonard.com and our team will follow up. Thanks everyone for your inputs and also questions in the Q&A session and chat. This will be followed up in written. And also thank you for following us on LinkedIn. That's it. Thank you for your attention and have a nice rest of the day.